Hey, what's up, guys? Just another review here. We had an Asia trade that we just took, a short position. Want to get into the thought process as to what we saw, why we had a short bias, our entry model, and of course, why this was our target. So, go to the 5-minute chart. Now, I have this reference up here because the way I see the market is that if we were willing to drive through these prices and close above the previous day high, that I would be very bullish, because clearly on Friday during New York we had tons of trouble getting through this level. So I was actually hoping for a long trade, but I was waiting for the price to tell me more. And if we just look at the Asia Open, two very important things happened. One, we had about 130, it was 123 and a half points of movement immediately within 45 minutes of open, right? That's the first thing. Second, it was very directional price action. So that's telling you all the sellers are in control. Okay, third, we have two 5-minute price imbalances. So the bears are clearly in control and price isn't even drawing into it to rebalance and look for further downside. Usually we see price rebalance a bit, maybe the whole gap, maybe just half the gap, and then some continuation. But when they don't even touch the imbalance, that just tells you that sellers are really in control, at least in the short term. Apart from that, these blue references, they're just lows that I had marked up. I marked them up as we were breaking those levels. I thought, okay, we have one. Technically, that's a break of structure. Even though this level is not responsible for a new high, it still counts like a break of structure. Same with this guy. So lots of confluence there for a short bias, and now we're just simply looking for an entry model. So we go down to the 1 minute, and I actually missed the entry I originally wanted, which was this gap right here, right there. I just wasn't looking at the screen then. So when I saw price drop around here, I was thinking, okay, perfect, we're going to rebalance. We're going to do something like this. And then as soon as we close beneath the gap, I'm in, right? So, but that didn't happen. And that's when I thought, okay, bears are really in control. This was the very next gap that I could have entered around right here. We ended up getting a worse fill because, again, I missed this. But thankfully, this small gap that you see there was another price imbalance. And that was just basically what I was looking at. I was looking for price to inverse the gap. And I did end up taking a little bit long. I got in right over here. And our targets were a 5-minute gap fill. So if we go down to the 5, you'll see that we had, I actually erased the references, but basically this was the gap fill. This was a gap entry. There's another gap fill right here. And that was pretty much what we were looking at. So we looked for shorts after seeing lots of expansion and sellers in control, price imbalances being respected. And as always, our entry is based off of an inversion or off of a respect, like a tap and go style of a price imbalance. And we did have these liquidity levels marked because price can turn around there. So after we tagged one, closed beneath it, stops went break even. And then after we tagged the second one, we trailed our stops. But ultimately, our target was actually in between these levels. It was right there, because that was a 2R, and our model seems to thrive at a 2R. However, price was so displacive to the downside. I thought if bears are really in control, the trend is going to continue, and these gap fill levels, in theory, they're high probability. So that's where we placed our take profit, and that was pretty much it. Pretty much the same system we run every single day. If you look at the previous videos, you'll see it's the same exact process every single day. That was what we took here. That was what we took here. And yeah, just another Asia trade, thankfully. All right, peace out, guys.